the Federal Open Market Committee increased the policy interest rate by 25 basis points 2 weeks ago, and still believes further increases are warranted to achieve a monetary policy stance restrictive enough to gradually bring inflation back down to 2%. Earlier this February as well, Federal Reserve Chair Jerome Powell released a statement from the FOMC detailing the unanimous decision to increase interest rates by 25 basis points. Now, we know you're curious on what this means for us and for the crypto market as well. And so, welcome to Data Dash. And for today's video, we will be delving deeper into this matter. But before we continue, make sure to hit the like, subscribe, and bell button to stay updated for more of our content. But other than that, let's begin. Now, the current situation of the FOMC is that they have decided to raise the goal range for the federal funds rate to 4.5 to 4.75%, and it expects further increases in the target range to be appropriated as needed to achieve a monetary policy stance. The committee reaffirms its resolve to bring inflation back down to 2% by the end of the year, and they even emphasize this point 3 times. Taking a look at the federal funds rate in the United States, we can see that after this recent 0.25% hike, we've seen 8 consecutive rises in a row, bringing us to levels almost not seen since well before the '08 housing market meltdown. Looking at the inflation rate in the United States over the past 25 years, we notice that it has indeed begun to come back down. But when we take a closer look at max, we see that we are still at levels not seen since the 1980s. Let's analyze the Q&A that followed Jerome Powell's public speech and discuss what it all means for crypto investors. For the first part of his speech, Powell emphasized that the economy is obviously slowing down. These rate hikes aren't free, but he wraps off by pointing to numbers like unemployment to argue that the economy can handle future rises. Powell mentioned that although the US economy slowed dramatically last year, with real GDP increasing at a below-average pace of 1%, recent data hint to modest improvement in consumption and production this quarter. Higher interest rates and slower output growth appear to be weighing on business fixed investment. Consumer spending appears to be growing at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. The unemployment rate is at a 50-year low. Job vacancies are at an all-time high, and salary growth is above average, all despite the slowdown in economic growth. Although the rate of job increases has slowed over the course of the previous year and nominal wage growth has shown some signs of moderating, the labor market remains unbalanced. Employment has increased by an average of 247,000 jobs per month over the last 3 months. There is a severe shortage of workers despite the fact that the labor force participation rate has not changed significantly over the past year. While we set 2% as our long-term inflation target, it has remained far higher than that. So it's clear that Jerome Powell is still using conservative language, and he's reaffirming his belief that inflation needs to be above 6% through the end of the year. Bitcoin after that Fed meeting popped up. The stock market after that Fed meeting popped up. The reason the market reacted this way is because the Fed did what they hinted they were going to do. The Fed has been hinting at an increase of 25 basis points, and they actually did it, which is what the market likes. The final trend change, if the trend either pauses or pivots, would occur if Bitcoin is able to cross back above the 200-week moving average, which would indicate a significant shift in direction. Jerome Powell has made it quite apparent that they do not want to end monetary policy early and that they would rather choose the route of being more active with inflation control. He added that it's hard to control the danger of doing too little and realizing 6 or 12 months later that you were near but didn't quite do the job. Inflation rebounds, forcing you to go back in. And now you have to worry that people's expectations have become anchored. This is a challenging risk to manage. And while they have no motivation or desire to over-tighten monetary policy, they do have measures at our disposal to address the possibility that we may have gone too far if inflation ends up falling more quickly than expected. As we still have the biggest inflation in 40 years, he does believe there is more work to be done. According to Jerome Powell and the FOMC's official statement, we may anticipate at least another 0.25% hike at their upcoming meeting, with more possible in the future. They may not be as aggressive as the 50 or 75 basis point hikes we witnessed throughout all of 2022, but they also aren't ready to quit. They aren't prepared to change course because of inflation data. But why not pause for a moment? Can you pause for a month to assess the situation and decide whether or not to resume if necessary later? Now, an interviewer during the meeting has a similar thought as ours and asked that given all the work that Powell and the Feds have put in over the past year, why do they think any further rate hikes are necessary? Why not wait to see what happens over the next few months before deciding whether or not to do so again? Powell answered this by saying that they have already increased rates by 4.5 percentage points, and they are debating whether or not 2 additional increases would be sufficient to reach the level they believe is sufficiently restrictive. Because inflation is still very high, they are considering long and variable lags and thinking that the story they are telling about inflation is into ourselves. And the way they understand it is basically the 3 things that they've just gone through a couple times, and again, they don't see it affecting the services sector housing just yet. So, they're trying to make a final judgment about how much is restrictive enough, and that's why they're slowing down to 25 basis points, and they're going to be carefully monitoring the economy, inflation, and the recovery from the financial crisis. Meanwhile, the interviewer added if Powell has talked about with his coworkers in talking about the conditions taking a pause for the week at their meeting, and Powell replied by saying that they wouldn't want to start to drive and describe all the details there. But that was the sense of the discussion, which is to really talk and focus more about the path forward, and the public will see the minutes in 3 weeks and will given more details about the path ahead and the state of the economy as well. Now, as a bonus, do we think the Feds are nervous about the striking debt ceiling? Well, Powell's answer regarding this one is no one should assume that the Fed can shield the economy from the consequences of failing to act in a timely manner. In terms of their relationship with the Treasury, Powell and his colleagues are their fiscal agent, and they're just going to say that there is only one way forward here, and that is for Congress to raise the debt ceilings so that the United States government can pay all of its obligation when due. So far, what do you think about these recent events? Do you think crypto investors as well as the crypto market should be worried about this one, or it's not that much of a big deal? Let us know what you think in the comment section below. But other than that, thanks for watching. This is Data Dash. And if you liked this video, then might as well give this one a thumbs up and hit the subscribe and bell button as well to stay updated for more of our crypto news, tips, and content for you. Thanks again for watching, and we'll see you soon. Bye.